right, good morning, everybody. Back, do it again. It's jobs week. It seems like every day this week we're going to be getting some form of jobs data starting tomorrow, it looks like. For it to, everything else outside of the jobs is going to be focused on whether or not our government will continue to run. This will directly affect GDP. So if we do get a shutdown, they're talking it won't be a partial shutdown, it will be a full shutdown. They're looking at 40% of the government. There was a nice write up on Gamma Lab from Bank of America. It looks like non defense and civilian defense federal employees represent roughly 1.2% of real GDP. That'll be fun. So we'll see how the headlines go with that through the week. But between that and jobs, expect the markets to act a little off, right? Because there's just this really big unknown with a shoe that could drop at any time. Unlike having, some future event where you might not know the outcome, but you know the event is coming and you know what day it's coming on. NASDAQ up with small caps, a little odd to see those paired together like that back to back. And it just kind of goes to the statement that I just made. Things are going to be a little weird this week. The tools that you use may not function correctly. They may be missing signals, or the reason that markets move, right? It's what we focus on all the time. What's making this market move? It's a list that is generally comprised of volatility, treasuries, commodities, bonds, 0-day options, Mag 7. It's not an exhaustive list, right? It's really not that big. When it comes to this week, having it as a combination between treasuries and possibly commodities, bringing gold into it, I think it could just be a very odd week. So approach with caution. UK is doing the best this morning, and Hong Kong is basically flat. Japan also flat. So it just kind of picks up from there. Oddly enough, or maybe, nice enough, it's not Japan that's causing us concern this morning. Got a lot of Fed speakers again this week. Really not expecting any of them to, be providing any revelations. They're just singing from the hymn book. But make no mistake about it, the non-farm payrolls at the end of the week is the biggest thing on the agenda. And it'll all lead up to that by the end of the week. In fact, as we get closer to Friday, we will expect to go into the hurry up and wait mode where we tighten up, stay inside the previous day's range, and chop into Friday to get that data. If we look at the way CTA positioning ended the week, it's just tightly wound within its own range. At the moment, we don't know if this is a pre-consolidation breakout or if we are setting lower highs and lower lows. It sure looks like we're setting lower highs and lower lows, but we need to see what happens with this dot. If it can run up and break this high and challenge the previous high, then it's just a consolidation before the next breakout. If we set another lower low, then we have a full trend to the downside because we'd have two lower highs and two lower lows, and that's a full set. I appreciate that. Someone said jobs will be bad. TR has announced that they will performance PIP 6,000 employees. 6,000. But is it going to show up on this jobs report or on the next jobs report? Right? Yeah. If you have a link, oh, in a few months. Yeah. The market is so short sighted, it only cares what's in front of its nose. They won't throw a fit because of something 3 months out. Right on. So you guys can get that from TR if you want to dig deeper into it. Jobs is the whole thing, right? It's what finally got Powell to capitulate, and it's the other side of the coin on the dual mandate with the Fed. So, it's not easy to dismiss. It's a really big deal. All right, so we had this sort of a melt up behavior in the overnight last night. So we got an inside day breakout. We are starting that TRB that I talked about Friday morning. Now, Friday morning, we wasn't quite sure, right? And I mentioned that it could go two ways, that we would stay inside day and then make the run or attempt to make the run on Monday, which would give us the TRB setup, or that on Friday, we would just begin that rally and make it all in a single day. Well, obviously, we didn't make it on Friday. We stayed inside day. We're starting the break now, and it's making a little bit of a push, but we're starting to stall out. So the TRB that we were talking about on Friday, it looked pretty good, at least Sunday night, when we started that breakout, everything was running. But now we're stalling. We're getting underneath VWAP, starting to fade a little bit. We could end up not getting back to this previous high, and then that's going to set us up for a lower high. At the moment, this is not a lower high because this candle isn't done. For all we know, this candle's going to close, even if that's the high and we don't get any higher today, it could close here, and then tomorrow we could resume. So we don't know what this candle is, if it's a lower high or not. But we certainly got our low in, and that needs to stay as the low. We break that, and it's going to be really bad. We are above the midpoint as well from this pullback, and we need to keep that at 66.92 cog line. Just keep your eye on that, right? It's basically what we need to look at. Measured wise, it's like 66.90 and a tick, whatever. 66.92. So far, it's right on schedule. We do have 67.53 overhead. So if we can get through 67.32 cog line, which is what we're hung up on right now, if we can get through the cog line, we can get to 67.50 and get that call wall tagged. Then we would be moving away from those highs after a key level. I would like that better. Plus, it would complete the pattern. And, it's not about I told you so or look, I was right. But I do like it when I'm right. We'll see if my butterfly gets paid up there. I got some verticals up there too, but they're not as wide as I should have made them. Just trying to keep it cheap. So we'll see what we get. The put wall parked at 66.71. The should have. I don't think I checked that. Let's check it. Make sure that call wall didn't. The put wall didn't roll up. It kind of feels like it rolled up, doesn't it? I don't remember it being that close. It's sneaky. Yeah, the put wall rolled up. All right, I'll get a picture of this put into the chat. The put is the cyan line down here, and the calls are the kind of a pink line up there. And you can see a sharp increase in the puts right there. So I'm just gonna get a picture of this. Yeah, it makes it nice when you scrunch it up. All right. Good, good, good. That was not what it was supposed to be. So hopefully you guys had a good weekend, huh? It was nice here. Now I still feel like this move in the puts, like we talked about last week, is a easier way to jump the shark, right? Like I've seen it so many times with moving averages, but the same concept applies. If you want to get past a key level and that key level keeps holding you up, then get right against that key level and then close for the day and jump it in the overnight. So if you think about where the put wall was, let's just say it was down here in that 66.30 area, we would have to fall all the way down and get there and then break it and then continue to go lower. And that's a really tall order, right? It's really rough. Take it the other way around. If we have the put wall really close to us and then we break it, well, we still have a lot of momentum and a lot of unfinished business that can drive us lower beyond that point, right? So having this put wall creep up without the call wall also moving up is pinching us, squeezing us, and it provides a quicker exit to jump that rail and run. So I don't see this as a good sign. If the call wall had also moved up at the same time, it would be a completely different discussion because then it would open the door for us and it'd be like herding cattle or maybe herding cats, right? It at least opens a path forward higher, but without the call wall being rolled and only the put wall being rolled, I don't see this as a good mechanic. We got a lot of volume on a Monday, all things considered. 76,000 in the overnight, 76.7. It's not bad. And they got a lot of work done with that melt up. Interested to see how the volume profile lays out this activity. Really no activity in the kill zone at all. Europe opened and it just continued the move that we had saw all through the Asian session and it just got it done. But now we left a little liquidity gap up here. We might cycle back into 67.32 just to get that closed, maybe. Other than that, look for a gentle reciprocation. So was it like 10 points above is 10 points below and wait for the market to open. The put wall and the zero gamma are back together again. It looked like, mommy and daddy were fighting and they were split up for a little bit, but they're sitting together on the couch again. I know I'm a nerd. You can get over it. We made the ADR 1, or the ADR half, I guess is the way we like to call it. Generally speaking, when you get to the half early enough in the day, you can go to the other half by the end of the day. And we don't even consider that to be bearish. It's just a function of wave and the way that price moves. But then we got above it, and that kind of messes everything up. So once we had got above it and we kept the breakout above it, we needed it. We needed to keep it. Now we're giving it away again. So there is a bit of a buffer here. There's no perfect way to do this, but just consider there's a little bit of a zoning issue, right? So if that's your fence and that's the neighbors and this is yours, then the city always says, well, there's a little bit of a buffer here. Price can move around that buffer and still not be considered broke down yet. But at some point, if we get too far away from this ADR to the downside, then we look at it as a point of no return, no going back today, and it opens the other side. How far is too far? I've got a couple of clients that have set numbers on it and said, well, they just used a set number like a collar. I tend to just look at what price is offering. We can see back here where it kind of stalled out early, this little area. And I'd say if we get back inside of that little area, then we've gone too far away from that line and we've passed the point of no return, and we should just come on down here. If we can stay here and get back up, then we can close this gap at least. There's a little liquidity gap right there, 67.32 cog line. We would need to break our own Globex high to get to 67.50. And if we can get through that, then we have a chance of breaking last week's high. But why would we do that? Right? Like, what's the catalyst? Plus, as I've said before, if Europe and Asia got us to where we are today, watch out when Europe closes. Asia's closed already. We'd be looking for Europe to close. Watch that. And if you're unfamiliar with the time frames of different markets and when they close, there's a really great free website called tradinghours.com. It tells you if they're on holiday or not. It tells you when all of their holidays are and when they open, when they close, when they will open again, because it has a countdown clock. It's fantastic. So go over there and you'll see when every one of the markets around the world will open and close, or if they even opened at all because of a holiday. And the best part is it doesn't cost you anything. We were talking about getting to this lower ADR. Getting back inside of yesterday's range would not be a good thing at this point. I know as a part of a wave function, you get to one side early enough, you can go to the other side by the end of the day, but getting back inside of yesterday's range would not be a good thing at this point. We got the breakout, and we really need to keep it. Otherwise, it means that this TRB failed and that we set a very clear lower high on the daily if we come all the way back down and we get inside of yesterday's range. It would leave a really big wick behind, something like this, for an example. And it would be read as extremely bearish as a topping pattern up here. I'd rather just complete that TRB first and then do, whatever. Today's floor pivot is higher than yesterday's. That's bullish. Price opened above it. That's also bullish. But we have an MDP. It doesn't count yet. It'll count tomorrow. But so far today, we have not hit our daily pivot. The daily pivot is the lower one down here. Gonna act up so early this morning. So it's all the way down here. We would have to drop all the way back down and hit that. Otherwise, we're going to have a missed daily pivot. And it's not a bad thing to have a missed daily pivot. The thing is that markets want to hit their pivot. They do it more often than not. And so when we haven't hit it, it stands out as being particularly bullish or bearish, depending on which direction we're going. The weekly floor pivot is 66.92 cog line. Isn't it neat how those levels just keep showing up again and again? And it has a very narrow channel. A narrow channel implies that if we break out, we can keep that breakout and keep on running. Just remember that these channels don't make price break out. They don't make price do anything. And the breakout that it's talking about is last week's range, because it's a weekly pivot that we're discussing. So there's last week's range, the doji bar, red. So it's talking about breaking out above or below that, and that the breakout might stick and that we could keep on running. Well, that would put us into like what, 68 and a quarter or something like that. Or below 66.24 could get us down into the 10-week moving average, 65.50, something like that. Just remember that that weekly pivot point isn't making price do anything. It's just giving us some insight on if we did break out, what's the expectation. For today's daily pivot, the channel's much wider than yesterday. Wide channels imply that if we break out, it doesn't stick. Well, we already did break out because it is a focus on yesterday's range, which is this. It says that if we break out, it doesn't stick and we very likely come back in again. So this wider channel implies price is going to come back down into the box. Again, just remember, the floor pivot doesn't make price do anything. Not the mids. We hit R2. That's very likely all we're going to get. R2 is usually where it stops. If we get extreme, we can hit R3, but what would cause such an extreme behavior that we would get all the way to R3? Now that we've tagged R2, it's likely that we sit between R2 and R1 and just chop. Obviously, if we cut below R1, then we aim for the floor pivot, which is back here at 66.85. And if we get past that, then we've got S1. R2 to S1 is in the book. So, we've done it before. We'll do it again. It's a lot of research on it, actually. But we'd have to get back below R1 to even begin that discussion. Once we got below R1, we'd have to get back inside of yesterday's trading range. And then through yesterday's midpoint, you get the idea. There's a lot of pivots below that we would have to fight through to make that happen. And so far, we haven't even lost our mojo, right? We're just still getting this melt up. Although the pullback that we're looking at is certainly deeper than any of the pullbacks we've had all night. So things are changing. When you think about work getting done, right, rather than just from a retail trader's perspective of the idea that somebody's buying this because they think, it's going to go up, or that they're selling it because they think it's going to go down. Think of it from the perspective of somebody who needed to get payroll done, or someone that needed to hedge some other thing. And they just got the order on their desk that said, we need you to pick up 20,000 contracts. And so they spent half the night getting that done, just picking up contracts. They weren't bullish. They weren't bearish. They were just doing their job and picking up contracts. Well, if that's the case, it really looks like they got a lot of their work done last night, right? So if they get all their work done in the overnight, what's the reason for them to come in and trade in the middle of the day if they're already done? They've accomplished everything that the boss told them to get done. Whereas if it was really tight and we didn't get anywhere on the previous night, then you got to kind of assume they didn't get any work done and they're just looking for the open And at some point, they will come in there and get their work done. And when that happens, then well, they got their work done. Last week's distribution was just ugly. If we continue this fade, we've got last week's point of control 66.92 cog line. Below that, 66.60. Overhead, we've got 67.50. So we're kind of trapped in that 100-point range, 66.50 to 67.50, and all of this distribution and trash in between. It's not a good look. It's not clean at all. And it's just a really nasty ride. You know, when it is really nice and clean, we'll take it. I mean, it's just fantastic and it helps a lot. Really lays out a game plan. But when it's not, don't try to fight it. You know, just acknowledge, yeah, this is trash. There's no real help here. And just call it what it is and move on. Right. I've seen a lot of people try to Ouija board this out, trying to read the tea leaves. And like you're just wasting your time. If there's nothing there and it's complete garbage, then it's just garbage. Just leave it alone. What we're looking at here, I don't look at very often. This is the cumulative volume index. It's specifically on the NASDAQ, but if you were to look up the CVI on, say, TradingView, then you can look at all of the US markets combined rather than just picking one like the NASDAQ. It's a thinkorswim thing, so, you know, it's what we got. Below that are the moving averages 10, 20, 50 using the colors that I like to use, and I wrapped it all up inside of a Bollinger Band. Cumulative volume. So if it's headed to the upside, we got net buying. If it's headed to the downside, we got net selling. And you can see that we've kind of topped out. Okay, we had like a little micro double top here, and then we've started to fade. And it has been divergent from price for a while because we topped out in the cumulative volume back here. So price kept trying to go higher. The volume was already declining. Now we've tested that 10. We're resting on it. And that's the concern at the moment. That's why I'm bringing it up. We might break underneath that 10 in cumulative volume. Even with this push right now, this needs to match that, and it's not, right? It's kind of flattened out, maybe even going to roll over this morning, and yet price is pointing up like it wants to get that TRB done. So keep your eye on the cumulative volume. Probably be better to look at the TradingView version since you can wrap all of the markets together. If not, just type in CVI on Thinkorswim. You won't find mine, but I'm more than willing to share it with you. CVI. All right, actually just spell out the words cumulative volume. It'll show up. If you type in CVI, it doesn't have one. Here's mine for anybody that wants it. It's like I've said before, I'm a trader, not a salesman. I don't sell these indicators. The one that I use on TradingView is not custom. It's just the one that I use, you know, that I found on TradingView. It's nothing unique to it. You should be able to change the colors to match whatever you use. All right, as we talked about last week, we're looking for the point of control to move away from this spot. We were trying to guesstimate where it was going to land next. In the short term, it's likely just to rise up a few points and end up into this 66.95 area, maybe 6,700 zone. As we wipe out these candles on the left with new candles on the right, by default, it's very likely going to go there, but not for long, right? We'll wipe that out, and then we're very likely going to see that move up into 67.50. There's nothing else on the table. There's nowhere else for it to go. So a very short-term pause at 6,700 or 66.95, whatever, this little spot, and then up here. Because as we roll this across and we wipe candles out, there's nothing else, right? So either we get some really big action in one of these previous spots that fills it in. Oh, sure, it could go to the moon, right? Absolutely. Yeah. I've always argued price can do whatever the heck it wants. And it never seems to ask me for permission first, right? It just goes and asks later. What do they say? It's better to beg for forgiveness than ask for permission. I know, very rude. The TPO, I think, is at least showing a better profile. We're already above this, and that's where we expect that to run. So we'll see the point of control move up into that, and then we'll see it move up into this. So unless we see something build out in this shallow area, or unless price comes down and rebuilds the 67 from a new spot, it's very likely we're going to see 67.50 as the new point of control by the end of the week. We got a new VPOC on Friday. So now we have one overhead at 67.50 from the 23rd, and we have one now from the 26th at 66.95 or close enough. Yeah, that's pretty good. 66.95. So it's not bad for a make or break, but even to get back to that level, we've got a lot of stuff to get through. This morning in the TPO versus the volume profile, we got a little bit of a disagreement. More trades down at this level, more volume up at this level. 67.32, a lot of volume up there. But they did a nice job with that melt up last night. They really kept it on the rails. That's interesting. All right, so on Friday, we had a little bit of a preview of what this week's range might look like. And it's still relatively close to that range. It looks like it shrunk a little bit from Friday morning until Friday at the close. So it's just a little smaller than that. Still, compared to the week that we had, these 2 weeks are almost identical. Now you can get the calculator out and, get it down to the tick. I just don't do that. They're the same size, but this week's range is a little bit lower than the previous week's range. And you can see it's all about where the Friday ended. 2 weeks ago, the Friday ended at like 67.20. And then, of course, looking back at Friday, we had basically 6,700. So it's 20 points lower from one Friday to the next. And that's the 20 points that you're seeing in the range here. If you liked last week's uncertainty and elevated volatility, well, then you'll love this week because it's a lot like it. The difference is we actually have reasons for that volatility this week. It's jobs week. Typically, if it's non-farm payroll, FOMC, CPI, PPI, one of those things, we would have gotten a narrow week because all of those are volatility suppressing. And we would have expected to go sideways a day and a half, 2 days into that event. So like starting Wednesday, midday, that we just stop breaking out, we stop running, we start playing reversals, and that gets us into Friday. That's not what this range is telling us. So don't anticipate a hurry up and wait week where we go sideways into non-farm payrolls because this is saying the market isn't pricing that in. We can still get it, but they're not pricing it in. They're pricing expansion and confusion and volatility. breakouts that continue, not reversals back inside the mean. And it's going to throw a lot of people off because one of the things that makes trading the indexes so nice is that it is a mean reverting product. More often than not, breakouts fail and it comes back inside the box. That's just what it does. And even when it does keep the breakout, it's still going to behave within the linear model, right? And it'll reach the edges of the breakout expansion and come back in again. The wave, right? The wave that we talk about all the time. So be careful with breakouts this week. The market says those breakouts could continue and that it could stick. We are still holding above the 10-day moving average by around 0.5%. You can see the range that I have drawn. It's 0.5% above and 0.5% below. Above that, we have 1% above and 1% below. When we're in this smallest box, we can just chop back and forth above and below the 10-day like it's not even there. It won't be support or resistance. It won't be a key line in the sand. It's just nothing, and we pass back and forth through it. Maybe it's considered gravity at that point. Either way, if you think about the ocean, if that's the flatness, then you have waves that bring the waves up, and then the waves go down, and they go below the flatness, right? So that would be the 10-day. Whatever that line is in the middle there, sea level, that's the 0. So we can just go above it and below it all we want. But once we get above the half, then 1% is generally where we've been topping out. We peak above it a little bit and we come back in. If we get above 1% and we keep going, then that means we're in some sort of a bullish phase. Or if we get below it and we keep going, we're in some sort of a bearish phase. They don't have to be, an entire year like 2022 bear market. It doesn't have to be like that. It can just be short term, 6 weeks, where we are holding a breakout of more than 1%. We're just driving steady above the 10. We've seen it before, like back here when we had almost 2 weeks of riding above that 1%, staying above the 10, or back here. So you'll get it in clusters where we get it and we keep it for a week and a half, 2 weeks, and then we lose it and fade back again. More often than not, though, we just hang less than that 1%, and then we fade back. Just good, clean market behavior without the added exuberance. Looking at it from the 10-week perspective, we're still more than 2.5% above the 10-week, right? We're more than 2.75% above the 10-week. This is good, clean, solid, healthy backdrop. This isn't bearish in any way, shape, or form. It's not overbought. It's not overextended. It hasn't moved too far, too fast. It doesn't owe us any mean reversion or pullback, and there's nothing wrong with this at all. So sure, we've got a lower high forming, but we don't know if that's going to be a lower high. If it's my TRB, we're going to go back up to this previous high, like I talked about on Friday. So the market says there is nothing wrong with this at this point. We would need to look elsewhere if we're looking for any signs of degradation or weakness. But certainly not here. Looking at the things that are down this morning, nat gas is down, and the Mag 7 down volume is down. Now, it was up more than 8%. So the fact that it's down a little bit now, 2%, doesn't really inspire. But if we look at the things that are up this morning, the VIX is up. It was down 4%. Now it's up 4%. Excuse me, it was down 8%. Now it's up 4%. We got China, Bitcoin, gold miners, more Bitcoin, get some China again, and a little bit of China right there. China. Mag 7 up, volume is up. Uranium, more uranium. Chips, China. The small caps are making some moves. It's what this IPO, that's what I use it for anyways. It's just representing those small caps. Then we got some Mag 7, communications, technology. If I was looking for a rally day checklist, right, the things that I would want to see for a really good bullish breakout rally day, it'd be everything that I just pointed out. You got Mag 7 exclusively, and then you got communications all by itself is really good. Chips by itself is really good. You start putting those together, it's fantastic. Add into that some small cap stuff, and then China and uranium as a theme with the data centers, cloud computing, it's almost there. This is a really good start for a breakout rally day. So the idea that we already got the breakout, right? We've been melting up all night. We faded back to VWAP. Everything that's up so far says that this should continue. So keep your eye on it, because if we begin to lose those things, then obviously that shouldn't continue. The one thing that we can't really validate here in the pre-market is 0-day flows, because we got to get into the open to see those flows, right? So we don't have that. But we certainly have the equity backdrop that I like to have when we're looking at that checklist of, could we have a breakout rally day? Yeah, we could. We got everything we need for it. Now, some of those have to be validated, right? Like cloud, for an example. It will fake you out, and it will look at what happened Friday afternoon rather than Monday morning. It could be Thursday afternoon, if we were doing this Friday. So, don't think it's a Friday thing. The point is, whatever happens after hours, it can read that and tell you that it was pre-market when it wasn't. On Thinkorswim, it can happen. So I like to come over and look at it on TrendSpider, but you can look at it on just something other than Thinkorswim. Notice we're not seeing a bunch of candles here this morning. So it says cloud was up on Thinkorswim. This says we got nothing on cloud. So take that one off. Thinkorswim, it does a really good job. It just struggles with pre-market stuff. Looking at this stuff, we got pot stocks leading this morning, and then miners, and then Bitcoin and China. So we got uranium, gold, precious metals, but far down the list, then we have chips. But we do have chips. It's up. We've got some real prints there, not just a couple of algos. And we've got Mag 7. Not very many candles, but there is something there. And then generic tech. We got finance moving in the right direction, but this needs to do more. So we want finance up at least 0.5%. But the fact that it's not negative is a good start. Bonds, Mag 7, chips, precious metals, China, and Bitcoin. Still the same ingredients, right? It's just not as bullish as it sounded when we were only looking at Thinkorswim's list. So if we're going to lose our bullish momentum this morning, we would see these things begin to unwind. We would lose the Mag 7, the Bitcoin, the chips, and probably bonds, and things start to unravel, and then we stall out and fade back. Right? So it should be simple enough. The target that I gave Friday on this TRB was back up to 67.50. That's the expectation. If we remain bullish and we break out today, then we could get a 111 or a 1236. And that would get us up into 67.87. I like 67.92 cog line for an overshoot, but whatever. Still like it. So I got for you guys, be careful, be safe. Keep your eye on the clock and the headlines.